Welcome back to the Daily Plate, presented by Marketplace.com, coming at you live from this image of a Target I found on Google. Target reported their Q4 2023 earnings yesterday afternoon, and it was a bit of a mixed bag. Let's start with the good news. Target posted a big beat on both EPS and revenue with better than expected holiday sales from Q4 of last year. Investors loved it too, propelling the stock up more than 12% in aftermarket trading yesterday. But it wasn't all good news. To start, this was the third quarter in a row of declining sales for the massive retailer. Target also said while they do expect sales to eventually bounce back, it won't be anytime soon, expecting sales to drop 3 to 5% more in Q1 of 2024 and expecting sales numbers to be flat or just slightly up for 2024 in its entirety. So what happened to make Target this stagnant? Are they not attracting new customers? Has consumer sentiment declined toward the brand? Well, to answer that, let's back up a little bit. From 2019 to 2022, Target's total sales jumped by about 40%, which is huge to say the least. But since 2022, that growth has really leveled off. The good news is that Target's sales are still up about 40% from their 2019 levels, but they're not growing at near the rate they were just a few years ago. So what's changed since 2022? Well, Target says that consumer discretionary spending in the US has declined, and they aren't alone in that belief. High inflation and high interest rates have put a crunch on many American households' finances. That crunch is hitting brands like Target, who rely a lot on discretionary purchases, the hardest. To end on a good note though, if sales were down and the overall outlook was down, why did investors push Target stock more than 12% higher? I mean, the EPS beat was good, beating by almost 25%, but it wasn't that good. Well, two words: profit margins. Target saw significant increases across the board on their gross and net profit margins. So, despite only increasing sales slightly, Target made a lot more net income at the end of the year. And as we've seen time and time again lately, Wall Street loves increased profit margins. What do you think though? Target stock is up 130% over the last 5 years. Is it still a buy? Are you waiting on a crash? Do you invest in Target? Are you just investing for the dividend? Come and let us know and join the conversation on Marketplace.com. Link in our bio to sign up.